January 2026. While the headlines are screaming about AI breakthroughs and the colonization of Mars, a tectonic shift is occurring in the very foundation of the global economy. We are no longer talking about a safe haven. We are talking about a financial eruption. On January 14th, gold officially shattered the $4,642 per ounce mark. But look at the chart. This isn't just a line moving up, it's the pulse of a dying fiat system. Silver, meanwhile, has achieved the impossible, a vertical leap to $90 per ounce, creating a new generation of millionaires out of those who held through the last decade of stagnation. Today, we are going deeper than ever before. We will break down not just the numbers, but the hidden mechanisms that brought us to this cliff. Why are Western exchanges losing control over price discovery? How is the silver deficit paralyzing AI chip production? And why has owning a physical bar become more important than having millions in a bank account? By the start of 2026, the BRICS Unified Payment Unit, the so-called R5 currency, moved from theory to reality. And guess what sits at its core? Gold. Eastern central banks no longer trust U.S. treasuries. In 2025, we witnessed an unprecedented event. China and India began demanding payment for key exports in physical gold or national currencies backed by the metal. This has caused liquidity to drain out of London and New York toward the Shanghai Gold Exchange, SGE. Today, Shanghai is where the real price is set, and that price is often a 5% to 7% premium over what you see on screens in Europe or the US. Why does this matter to you? It means the era of Western banks suppressing gold prices through paper derivatives is over. The physical metal is moving east, leaving Western private investors with crumbs. We are seeing the formation of two distinct markets: cheap paper gold that you can't actually touch, and incredibly expensive physical gold that everyone is fighting to own. If gold is the king, then silver is the wild beast of 2026. We have entered our fourth consecutive year of a massive structural deficit. Last year alone, the shortfall hit a record 300 million ounces. But here is the irony. You can't just mine more silver. Over 70% of silver is produced as a byproduct of mining copper, zinc, and lead. To increase silver production by 10%, you have to increase copper mining by 10%. In a world of environmental crackdowns and depleting ore grades, that is physically impossible. By mid-January 2026, the situation turned critical. Tech giants like Tesla and BYD began signing direct offtake agreements with mines, bypassing the public exchanges entirely. They need silver for EV contacts. If you don't have silver, your factory stops. Add to this China's move on January 1st to impose strict quotas on physical silver exports. Beijing realizes that silver is a strategic resource for their dominance in solar energy. The West has been left on a starvation diet. This is what pushed the price to $90. And this is only the beginning. Analysts are now predicting a vertical melt-up to $120, as shorts on the COMEX are forced into a panic cover. We are seeing the formation of two distinct markets: cheap paper gold that you can't actually touch, and incredibly expensive physical gold that everyone is fighting to own. In 2026, the world finally realized AI is not just software. It is hardware. And that hardware breathes metal. Every new data center requires thousands of miles of cabling and millions of connections where silver is irreplaceable due to its conductivity. But there is another side: energy. To power these AI neural networks, we need massive solar farms. Modern solar panels, specifically the TOPCon models, require 50% more silver paste than older versions. We are in a closed loop. We need AI to optimize the world, but we need the world's metal to build the AI. In 2025, the solar industry swallowed 19% of the global silver supply. In 2026, that figure is projected to hit 25%. Industry is literally vacuuming the metal out of the investment sector. This means for you and me, the private investors, coins and bars are simply disappearing from the market. Many ask, if prices are so high, why don't miners just flood the market? The answer is shocking. First, ore grades are collapsing. 20 years ago, the norm was 5 grams of gold per ton of earth. Today, miners are lucky to find 1 gram. To get the same ounce of gold, you have to process 5 times more rock, using 5 times more diesel and water. Second, the ESG wall and environmental taxes. In 2026, getting a permit for a new mine takes 10 to 15 years. We are reaping the harvest of a decade of underinvestment in exploration. This creates a situation where supply is inelastic. The price could go to $10,000, but we won't see a significant spike in production for years. This is a fundamental bullish factor that most people ignore. We are approaching the most dangerous moment. The COMEX and LBMA exchanges have traded paper gold for decades. For every real ounce in the vault, there were up to 300 paper contracts. This worked as long as everyone stayed calm. But in January 2026, a process called Deliver or Die began. Major funds started demanding physical delivery of the metal. Vaults began emptying at light speed. If this trend continues, we will see a force majeure event, a forced settlement of contracts in cash, dollars, at old prices, simply because the metal isn't there to be handed out. This will be the moment of truth. Those who held gold in a bank on paper will get depreciating dollars. Those who held the metal in their hands will become the new masters of the financial world. Gold at $4,600 and silver at $90 are not accidents. They are the result of a collapse in trust toward central banks and the realization that resources are finite in a digital world. For the rest of 2026, our targets are clear. Gold. We expect a test of the $5,200 level by Q2 as the BRICS currency officially launches. Silver. We are looking for a squeeze toward $120 per ounce. Any correction below $80 should be viewed as a gift. Remember, in 2026, the difference between investing and saving has vanished. Hard assets are the only way to preserve the fruits of your labor. Tell me in the comments, do you believe in the silver explosion to $100 this month? And what was your last purchase, Bitcoin or a silver coin? Hit the like button if this breakdown helped you see the big picture. Subscribe to the channel. Here, we tell the truth that the official reports refuse to print. Stay bold and stay invested in the real world. See you in the next video.